Hello, everyone, and welcome back to another edition of the Weekly Report. For Randall Riley, I'm Joshua Miller. Now, before we jump into this week's numbers, if you like numbers and going over data like this, you may want to check out Jason Miller's latest trucking market update covering March. Each month, he covers price, supply and demand conditions, and a new bonus topic. This month, he addresses light truck and SUV assemblies. The monthly update has a lot of great information in it, so if digging into data and numbers is something you like, check that out if you haven't already. Links below. But now let's get to why you're here. Let's get to this week's report. This week in job board searches and clicks. Truck driver searches were down 5% week over week, but up 5% month over month and 19% year over year. Meanwhile, click volume fell to its lowest point of the year with declines of 10% week over week and 18% month over month, but an increase of 58% year over year. This week in freight. Total load postings fell by 7% week over week, which happens to be 11% lower than the same week in 2021. It looks like we can expect year-over-year levels to be negative through at least May. All three major segments saw declines in load volume, with dry van dropping by 11%, refrigerated 8%, and flatbed was down by 6% week over week. Load availability was down in all regions across the U.S. with the exception of one, the Northeast, where load availability remained flat. Overall truck availability dipped by 1% week over week as the load-to-truck ratio was down in all segments and fell to the lowest level since mid-December. Spot rates, including fuel, rose by 5 cents. However, when excluding fuel, the rates were down by 6. Dry van rates, including fuel, were up 1 cent and down 10 cents when excluding fuel. Refrigerated fell by 4 cents when including fuel and 15 when excluding. And flatbed rates, including fuel, rose by 7 cents while they fell by 4 cents week over week, excluding fuel. Now, the story of the week. Trailer manufacturers are closely watching order intake and keeping the numbers relatively consistent from month to month. The February net U.S. trailer orders came in at 27,041 units. That is a 1% increase from January and a 6% increase compared to February 2021. While demand for equipment continues to remain strong, OEMs are being careful to meter orders to production levels. Placing orders is especially difficult for small fleets and dealers as OEMs are prioritizing larger players willing to make larger volume commitments. OEMs have kept a backlog-to-build ratio in the tight range between 7.4 and 8.4 months since June. That backlog-to-build ratio will soon push into 2023, where the new model years and pricing commitments could further complicate things. Reports indicate that fleets are willing to make sizable orders that would extend well into 2023, but some OEMs are unwilling to push the order board to those extremes. And that does it for this week's report. Thanks for joining us, and don't forget to head over and check out that latest trucking market update. Again, links below. If you haven't already, subscribe and give us a like and a share. We'll see you next week for another report covering all of the latest data and an all-new story of the week. Until then, have a great week, everybody.